Welcome back to the channel. Welcome back to the vlog. My name is Evan and this is Sense or Sense. And today I'm coming to you with a different kind of Fidelity video. I've been talking about how Fidelity had, essentially 10-day business holds on deposits and 16-day business holds on deposits and problems with checks being able to go into their accounts over the last, say, almost year now at this point, August of 2024. Today I wanted to come to you guys and tell you exactly the reason why I am staying with Fidelity, the three major reasons why I stay with Fidelity, even through the thick and thin. I've had a lot of watchers and viewers reach out to me and comment about, why don't you just move to a different brokerage account? Why don't you move to somewhere like Schwab or, E-Trade or any of the other major brokers out there? And these are the three reasons I came up with that are different than a lot of other brokers, and the reason why I've stayed with Fidelity. And mind you, I've stayed with Fidelity, but I do have a Webull account, I do have a Robinhood account, I do have a Schwab account, I have several other accounts. It's never good just to have all your eggs in one basket with one broker, as witnessed by these holds on Fidelity cash management accounts and other accounts. So let's jump right into it. First thing is, I want to ask you guys to subscribe and like this video. I appreciate all the support that you guys have been giving me recently. We crossed over the 300 subscriber mark, and now we're at 326 as of July 8th, 2025. I appreciate all the support. You guys mean the world to me. I don't do this. I don't have any recommendation links, anything like that. Any kind of, I'm not making any money on these videos at this point. So I want to keep it as free as possible for everybody, and liking and subscribing are the best ways I know to support my channel at this point. So thank you. So the first thing that I get from Fidelity that no other broker dealer really offers this exact setup for me, and this is very specific to my needs, is I'm a huge options trader. I like to trade cash secured puts, which basically means I am picking usually index funds like IWM and SPY, QQQ, things like that, and I'm selling puts below the current market value. So I believe that that these indexes will pull back at times, and when they pull back, they're good opportunities, because if you look at indexes over time, that they almost always go up over long periods of time. So I'm looking for good entry points, and one of the ways you can get good entry points is to sell cash secured puts. So what this means is you've got to have money in your account that will act as collateral for the potential value of the index funds that you're selling these puts on. So IWM trades at right around $220 a share right now. So each one put is essentially $22,000 worth of capital potentially if you get assigned on that sold put. So you have to have $22,000 in your account when you do a cash secured put, because you can be assigned on those shares at any time the broker dealer gets those shares called away by someone else, or essentially there's a dividend that gets issued. That's getting in more out of the scope of this video, but ultimately one of the reasons why I enjoy Fidelity and use their platform is because I'm able to keep money in their money market accounts and earn about 4% right now as of July of 2025, and sell those cash secured puts on those indexes that I'm trying to enter into. If I sell the cash secured put and expires worthless, then the premium I collect from those cash secured puts go back into my money market account, and I can start all over again. If I get assigned, it pulls the money directly from the money market account, but the entire time, these trades might be 30, 45 days, up to maybe 90 days in length on some occasions. That money sits there and collects 4% roughly right now. At Schwab and a lot of other broker dealers, they have a slightly different setup. You have to have a certain fund that you're holding on to. You have to have those funds for a certain period of time before you can actually sell cash secured puts against them. Sometimes they won't pay you any interest on the cash while you're doing this. So for instance, like Webull won't let you do this. They'll basically hold those assets in limbo and not pay you any interest on the amount. So in my case, if I'm selling one IWN put, it's worth $22,000. They'll hold that in my account at Webull, and they won't pay me any interest. So you can see how this is very beneficial for an option seller like myself. So that's the first reason why I've stuck it out with Fidelity. They're one of the only broker-dealers that provides that. The second reason that I've stuck it out with Fidelity over the years is because I do a lot of international traveling with my wife and my son, and they have a debit card that can be linked directly to my brokerage or directly to my cash management account, and they reimburse all ATM fees and all foreign transaction fees associated with that account back to my account after my trip's over, essentially. It's just usually within a few days, but I can go and I can withdraw roughly $1,000 equivalent in U.S. currency from a foreign ATM, and they'll reimburse me for all the fees associated with those foreign ATMs. Now, some of you might be saying, hey, you can get that elsewhere. Yes, you can get that elsewhere, and I do have this capability of my wife's Schwab account as well, but I've actually been overseas before. I went to Japan about 10 years ago, and one of the debit cards did not work in Japan at all the ATMs. In fact, it didn't work at most ATMs. So it's a good thing I had the Schwab and the Fidelity card at the time, and I was able to use one and not the other. So again, when you're traveling overseas, to have multiple options is important, and that's another reason why I keep a Fidelity account around, even though, say, something like Schwab could also benefit me as well. And I could move my money to Schwab if I were having so many issues with Fidelity. But I like to have both available, and I like to have two sources because let's say you go overseas and you have someone that steals your debit card or you lose your debit card, they have to lock one of those accounts down. Obviously, it might take a little while for you to get that straightened out, especially when you're on a trip, and it's always best to have multiple options for you on your trip to be able to pull cash if you need it. So that's another major reason why I keep the Fidelity accounts open, is I can use that Fidelity ATM card and get reimbursed for international fees and use it overseas without incurring quite a bit of expense. So, and then the third thing, which is kind of I think the most overlooked by most people. In fact, I don't know how many people actually utilize these, but in my retirement accounts, Fidelity has at 4, I think it is right now, no cost. That's right, no expense ratio, 0% expense ratio mutual funds that track broad-based indexes. They have one for the large caps in the U.S. They have one for international, total market, international, total stock market. So that includes large cap, mid cap, small cap, and they have one other one that I'm drawing a blank on right now. But I use the total stock market and I use the total international market index mutual fund from Fidelity in my retirement accounts because there's 0 expense ratio. And yes, I understand that you can find these options elsewhere in pay maybe 3, 4, 5 bips or 0.04 or 0.05, 0.06, somewhere in that range. When you're talking about hundreds of thousands of dollars and you're saving 0.05 on hundreds of thousands of dollars, it starts to add up. And so if I have that available in my retirement accounts, that is a huge benefit for me. It essentially tracks the same indexes that all the other ones that charge money do, except for it is a mutual fund that is pretty much exclusively available at Fidelity. And yes, some people will argue that mutual funds are not as easy to trade as exchange traded funds. You have to wait until the end of the day to make an opening or closing transaction, and that is true. But they follow the index, and they're very transparent. They have all their information available out there, and I just find them to be really beneficial for long-term investing. These are not trading tools. This is if you're going to go out and trade an ETF, like I mentioned before, like IWM, SPY, QQQ, things like that, this is not for that. This is for my retirement accounts. Set it and forget it. I've had these funds in there for many years, since they were pretty much released, I think. And I plan on keeping them for at least another 10, maybe even 20 years, if not longer in some cases. And to save the expense ratio, over 30, 40 years or more, it's going to add up. Even just a few percentage points compounded over time will add up to being, it could be 10 or 20% higher returns on your portfolio over a 30, 40 year period of time. So these are the three main reasons. Selling those cash secured puts and being able to collect interest, that's a big one. Being able to go overseas and have multiple sources for ATMs and cash withdrawals without having any fees, that's another one. And then finally, the third one is access to their zero cost mutual funds for large, broad ETFs, large, broad indexes. And I think that they're planning on releasing several more of those over the next couple of years, so that will become even more beneficial. So I appreciate you guys tuning in today. These are the reasons why I've stuck with Fidelity even through all of the problems that have been going on in the last year. And I appreciate all you guys tuning in, and until next time, thanks.